I'm Olivia Voznenko.
I'm Steve Guilfoyle. This is Street Smarts, and we are back.
And we have a special guest.
Who would that be?
Who is it?
This guy.
Yay!
Well,
I don't know
Chris
about-
Versace
a guest.
from Tematica.
A guest, maybe not a special guest, just a guest.
Oh,
No,
get out
you're
of
pretty
here.
high profile in our world.
That's a small world, Sarge.
Admittedly so.
These guys work together, but it's the first time they met.
That is true.
That's true.
Sarge and I co-manage the Street Stocks Under 10 portfolio.
Awesome.
That's right, which you can find at Jim Cramer's Real Money. That's a promotional piece.
Yeah, I know,
Yes,
right?
that
Come
is-
on,
that
we're
is.
on Modern Wall Street right now. We're going to talk.
So let's talk Wall Street. Let's go.
talk
Let's
Wall
go.
Street.
Let's
And
do it.
Yes, thanks for coming on board.
I'm happy to do it.
All right, Chris. So, guys, looks like the stocks are coming in a little bit today.
Mm-hmm.
Some are saying because of trade tensions, how they've resurfaced or whatever. What are your thoughts so far on
Well,
this
I mean,
situation?
we have said all along that trade was not going to be a very quick resolution, that it was going to take some time. And we saw some nice signs last week, Trump talking with the EU, maybe getting things further, an agreement, to work on an agreement, if you will, but they're still China, and they threatened this morning to fight back. At the same time, we're starting to get some economic data for July that shows, Sarge, it's a little slower than people might have been looking for, perhaps because of the anticipation of these tariffs. We'll see.
Yeah, I mean, it's slower than people might have expected in some regards, maybe in housing, maybe in the ISM numbers.
Yep.
Yet the Atlanta Fed raises the GDP forecast.
Stop.
Wait,
Just
did you say-
stop.
it's 5%.
Stop.
Has it ever been that?
It has. Actually, it was 16% in 1951, I think.
wow.
For a
Right,
quarter.
but when has the Atlanta Fed even been close lately?
They were sort of borderline close last time.
Now, the New York Fed is the one to watch.
They were way low last time.
I'd rather have low and beat than way high and miss, which is what the Atlanta Fed seems to do.
He's just happy to be in New York.
He is happy.
Oh, my sweaty body really is, yes.
You know what was big with that Juncker meeting last week was the agreement to reorganize or reform the World Trade Organization. That's really the crown jewel right there. And that means probably you're going to see some kind of alliance between Europe and the United States as they take on China.
I think
that's the big deal.
I think that's right. I'm also waiting to see exactly where does Canada, where does Mexico kind of come out.
Mexico wants to play ball already, Canada or not.
Exactly right. So, I mean, all of a sudden you're starting to line up. And I think I saw that on the trade imbalance, it's only 130 billion or so that China actually imports from the U.S. So they don't really have a lot of leverage against us.
No, they can't. This next tranche of 200 means we're already playing in water too deep for China.
Yeah.
So they have to play games with the currency in order to compete.
So do you think it's a timing issue, Sarge? Because I do.
I definitely do.
Okay.
I definitely think that, I'm on the record on national television. I think the trade wars are winnable when you are the market. And as the president has said, not only are we the market, we're the bank.
Well, it's funny. On the podcast that I do with Lenore Hawkins, Cocktail Investing, we had a guest on from Tukrium Asset Management, and they're all commodities trading. And they were saying, you see these drops in commodity prices, corn, wheat, soybeans, and in their opinion, it's unsustainable. Why? China's got 20% of the population, 11% of arable land. At some point, they will need to import, and either it's directly or indirectly from the U.S. And I think that's another reason to think, for your point, Sarge, this is time.
Sure, and along with that, we also speak to a currency trader named Douglas Borthwick, and Douglas is very bright. He thinks that the dollar has run its course. He thinks this DXY. He doesn't like the DXY. He thinks it's a nonsense index. But up here at this 95, almost 96 level, it is probably gone about as far as it can, and it starts to come back in.
Okay.
Yeah, throwing shade in the Dixie.
I guess so.
It doesn't sound that powerful of a word, but
Dixie? No.
So where are we going to go with this, guys? I mean, we do have a Fed rate decision today. Kind of forgot about that with all that's going on.
Yeah.
You want to go in there?
Well,
Sure.
when they don't have a song and dance attached, it draws a lot less interest.
Right. There's no, in other words, there's no press conference afterwards.
No press conference, no quarterly.
No, they're
Update,
getting
no
the
dot,
hell
no
out of
dot
Dodge.
plot.
Right,
none of that
thankfully,
stuff.
because that thing's nonsense to begin with. But
But we were talking about the economic data. All right, you were talking about housing. Consumer spending remains robust. We're seeing yields hit 3%. A little.
Yep.
They touched
that has to
3%
do with
today.
the Treasury's announcement that they're going to start focusing on the long end of the curve, which I think is outstanding. It's long overdue. Let's get this done. Let's get this done. Let's put some space between the 2 and the 10, and let's buy bank stocks.
JP Morgan.
J.P. Morgan,
JP Morgan.
Goldman, Citi, I'm along all of them.
Awesome, awesome. Now, what do
Okay.
you think about, you were, before we started taping, you were saying that the Fed isn't going to do anything today, and I agree with you, again, just for the reason you mentioned, that there's no show, if you will. But later in the year, the data's lining up that I think the Fed is probably going to go at least 2 more times.
If the GDP stays as hot as Atlanta says it is, they have to go 2 more times.
Now, what do you think, though, about, so like the flash PMI came out last week from IHS Market, and all across it for the U.S. was higher prices, and we're seeing that flow through the system now. And I think it's much more than just concerns over trade. And I think this morning too we saw some wage data came out that it's the best it's been.
It's finally starting to show up in wages. We know it's been showing up in benefits already. In fact, that's what suppressed wages, is that employers had to pay benefits, and benefits were rising so fast. So total input costs. Tariffs or no tariffs are going higher.
Right.
Obviously, they're going higher the longer a trade war lasts, and we probably will see some kind of relief rally in markets if this trade war gets put to bed sooner rather than later.
So are you thinking, kind of like I am, Sarge, that if Trump can pull this off, that we could have a great rally into the end of the year?
I think we might have a melt-up rally. I'm actually positioned accordingly, but with the understanding that this can turn against me.
Oh, absolutely. It depends on the tweet.
Without a doubt. I mean,
Exactly.
Tariffs, Olivia, in my opinion, are priced halfway in.
Yeah.
The trade war, they're priced halfway in. So it leaves enough room for a volatile market in either direction.
Which is kind of what we saw today. I mean, we had
yesterday.
Apple killed.
Exactly.
Well, yeah, Apple killed it with earnings, brought the market up, rallied everyone again with it, and now we're kind of taking it off the table again.
Well, the same thing was true with Caterpillar.
Caterpillar's
beat,
a great example.
beat, raise, trades off.
Yep.
That's
I
right.
thought they said that they was going to get
And then it rallied in the
best was
face of a
gonna happen.
downgrade.
Right, that's what I was
because
saying.
trade news was favorable that day.
That's right. That's right. I mean, the last several weeks or couple months, it hasn't necessarily been fundamentals. They are important, but it's what is happening in Washington and other pockets around the world when it comes to trade. And it's you just said it very well, Sarge. The wind. Which way are the trade winds blowing?
know. As an active trader of the defense sector, I'm well aware that although the stars are lined up for my names, they also need the materials that would be brought in.
Now, those are the names that you wrote a great piece on at the street this morning.
Thank you. Yeah, I'm currently long Raytheon, Northrop, Lockheed, Boeing, which I didn't write about this morning because I think Boeing needs its own special piece, and Kratos Defense, which everyone knows I've been involved in forever.
Yeah, I mean, we at Tematica like the defense names as well. A little bit differently, we have a safety and security theme, so we tend to look not only at homeland defense, national defense, but security, cybersecurity, and personal security, and we're long that whole space.
That's a very interesting space. In fact, I'm underexposed to it, so I probably need to speak with you later about
Call my office, Sarge.
What names
We'll
look
do
good.
it.
I'm going to call your office right now. Chris Versace, can you tell me what you think about Tesla?
Tesla.
Since
Now I was on a competing program yesterday previewing Tesla.
We have competitors?
I thought so. So
There is no competition. Okay, so let's talk Tesla.
thank you. What was it? Spicy? No.
Finance.
Finance Spice.
Yeah,
Thank
Finance
you.
Spice.
Finance Spice. That's it. So we were talking about it, and there's a couple different questions going on there. So when you look at Tesla, the first thing is going to be what's the actual production, right? Because you're concerned about the balance sheet, cash flow, right? Will there be another raise? Most likely there will be. I mean, if you look at their cash, their debt to cash now, I think is debt to cash is like 5 times compared to a year ago, just 2 times.
How
Right?
about cash flow?
What cash flow?
It's going to go beyond negative $2 billion.
Yeah, exactly. And they're already on the record saying that next year with Model Y and another Gigafactory, CapEx is going to pick up yet again. And those are all reasons to be concerned about the fundamentals of the business. But the bigger question was, how nutso is Elon Musk going to be on this conference call?
Well, that's a great point. There are only 2 stocks that I will not be long equity-wise because of the CEO. One is Tesla, the other one is Facebook.
You don't like Mark Zuckerberg and his little head?
Have you ever seen an earnings release more poorly managed?
Well, no, only when, well, you have to ask that question and then have the quick follow-up. When the CEO has been unloading stock as fast as Zuckerberg has.
That's beyond.
Yeah, exactly.
So these 2 guys will. I'll play the game in Facebook at least from an option side. I'll sell puts and calls outside the range where I think the stock will go, which could have got me in trouble the other day if I wasn't on the air with Liz Clayman. Thank goodness.
Well, Musk has one more quarter until he is going to start producing, according to what he's been saying.
Well,
making some money.
Right. So
it's a third quarter.
That is the big question about Tesla, right? Given everything that's gone on, you've got, like I said, there's some questions over production, cash flow needs. You've got a subsidy that's disappearing in California, right, that helps foster demand. So you look at all these things, and the expectation is in the fourth quarter, December quarter, they will actually generate positive EPS, something they've never done. And that's the gateway to some of these earnings expectations that have a $9 handle on them for 2020. The question is, not only can they get there, but is that timetable going to get pushed out? That's what I think people are going to be focusing on this call.
See, if they hit that target, 31% of the float is short.
Oh,
You'll have a short squeeze.
Oh, man,
absolutely,
I know.
absolutely.
So
You're
I
right.
can't say, oh, just try to short this name. In fact, last time I tried to short this name, I couldn't get the borrow. That's
What
how,
was the
that's how tight it is.
What percent?
I believe it's 31%
Yeah.
right now.
That's a huge number.
It's ridiculous.
That takes, you don't want to step in front of that bus.
31% of all the shares out there have a clock
But
buy
at the
ticket.
same time, there's so many people long like the FANG names. That's dangerous too.
Well, the FANG names is a
Right,
whole
gentlemen?
different ballgame. I think you
Yeah.
have to separate Netflix and Facebook from Apple and Google.
They're actually
from
making
Amazon
money.
and Google, because Amazon and Google have strong core businesses,
Yeah.
and they're also developing their cloud business
Yeah, well, the whole secret to Amazon is Amazon Web
at
Services.
this point.
Today, yes. I mean, it's the highest margin business, the biggest cash generating business that they have, and it allows them to fund everything else, particularly international. But I agree with you. I think that they will continue to disrupt, and there's a lot of things that they're doing that in. Not only just retail as we know it, but also retail from a private label perspective, right? They're going to continue to do stuff with Whole Foods. And the big one to watch, which given the aging population that we have and the size of spending on healthcare, is online pharmacy. Once they finally digest PillPack, and there's already chatter that they're looking to replicate that buy in India.
Actually, that's part of the reason why I'm very cautious about the big pharma plays these days.
Really?
Oh, I mean,
I expect it to go there.
yeah, the only one that I like, and we own this in stocks under 10, Sarge, is Rite Aid. But that's only because of the merger with Albertsons that changes the playing field.
Right. Plus, you're not risking all that much capital on it.
No, not at all. Not at all.
All right, so taking all this into consideration, we talked trade tensions, earnings.
Oh, no, Sarge. This is the what's
Economics.
next question.
This is the what's next.
Well, she's the glue that holds the show together.
I am like in the middle for a reason. How have you guys, I understand you're bullish on the end of the year, but how have you restructured your portfolio thus far?
Well, I went.
Stephen, yes, you're here
It's
too.
going to sound like I knew it was coming, and I kind of did know it was coming. But in January, I started going to higher cash when the market had that crazy run towards the end. So I missed the absolute top, but I didn't miss. But I also missed a lot of the pain that came right after it. And I stayed at high levels of cash for a very long time. I was up to 46% cash at one point,
wow.
which for a Wall Street guy is insane. I recently have been around 30%. I've been whittling it away. As we've seen certain groups come in, like everyone knows I like the semis, and they were part of my liquidation at different points during the year. I've been starting to get back into my semi plays. I just got back into some of these defense plays. I was never completely out of them, but I started beefing those positions back up.
You were scaling it.
Towards last week. So I've started reloading on the names that I believe in. I'm not really in new names. I got rid of General Dynamics. It's a defense name I'm not really all that fond of. Given that their contracts largely start with an M and not a B, and all the other guys are playing around with Bs. But I really have been focusing, trying to drag it in a little bit. I'm very well spread. I try to be diversified, although every trader I think now is long more tech than he's probably comfortable with, because everything is tech. Not just the tech sector, but every other business is reliant upon tech. My little business is reliant upon tech. So I think probably whether you realize it or not, almost every portfolio is probably towards 50% technology now.
Yeah.
Directly or indirectly.
Yes, both combined.
Yeah.
And Chris?
So if you dial back when all the trade headlines were first kind of coming about, I got a little concerned about the back half of the year. Back in January, which is the timetable you were talking about, Sarge, expectations for EPS growth, S&P 500 companies, was 21% year over year. And as we went through the March quarter earnings period, we heard a lot more about input costs. That kind of got me a little concerned about that. And then we had the whole trade and tariff issue kind of bubble up. So my whole thing going into this current earnings season is, let's match reality with expectations. and see where they come. And the first couple earnings reports were pretty solid. But now we've started to get some high-profile misses.
Oh,
Netflix,
and you
for
pay
example.
for them now.
Yeah, they're
you pay
priced-
for them huge now.
Yes.
Price
Oh,
to
it's
perfection.
not 5%.
Yeah.
It
could be anything.
Yes, especially in these ones, as you put it, that are priced to perfection. Let's see, Netflix, Facebook, Twitter, just to name a few. And what bothers me, though, is, and we were just joking about it, but even the companies that are delivering, like a Caterpillar, they're not getting that immediate positive reception either. So I think what we're seeing a little bit is and I wrote about this in the Stocks Under 10 Roundup, is we're seeing, I think, a shift in the market, right, from growth to value, and we're seeing it play out between the Russell falling off and the NASDAQ, at least up until Apple's results falling off the last couple of weeks, with the Dow and the S&P picking up. So so to answer your question, I haven't really structured everything because I've been in a little more cautious mode, where I'm more inclined to prepare myself for the back half of the year. Having said that, continue to like certain companies like Apple, like Amazon, like we were just talking about. We like McCormick and Company. It's a great company in the back end of the year.
A lot of people like that name. I'm not.
Oh, it's a great company. It's what I call a dividend dynamo. Every year, like clockwork, they increase it. But they're also benefiting from two other things, which is the push towards clean eating. We have a theme around that known as clean living. But the other is the expanding palate in the emerging economies, because they're trading up from rice-based diets to protein and other diets. So it's a positive as McCormick improves its position over there. And you just get the dividend,
McCormick, like
every year.
Like the spice company?
Spice and marinade company.
Oh, like
Need black pepper? You go to McCormick.
See,
Hey,
I guess.
Hey, that's right. They even own they own those brands, but they also own Lawry's. And being from a guy who's around the Mid-Atlantic, they own that. I'm blanking on it now. I can't believe this. That wonderful. It comes in a yellow box like.
Old Bay.
Thank you.
Old Bay. You put anything on Old
Yeah,
Bay.
real
exactly.
men like Old Bay.
Exactly. And the last name that I like, and I've had to raise my price target time and time again, is Costco, which is
What
fantastic.
a beast! Oh my.
Oh, it is. isn't it?
Literally.
But you know what though? So
Supersized.
So if we were to take a look at Costco and Amazon, right, you would say that they're wildly different, and they are. But I would argue that they have similar characteristics in that they both have a strong driver of cash flow and profits that most of their competitors don't have, right?
And they both develop brand loyalty at this point.
Yeah, absolutely.
They have good taste in stuff. I know people who are very particular that only like to shop at Costco.
Oh, I thought you were talking about the seasonal pulled pork sandwich that they have.
Oh my God, that is fantastic.
You mean the McRib?
No.
It's like a McRib on steroids, Costco size.
So before we close out, I'll tell you one other thing that Sarge and I have in common, which is we both like the fresh beef burgers at McDonald's.
Oh yeah.
I haven't tried it
New quarter
yet.
pounder is so much
It's
better
good.
than the old
Oh,
quarter pounder.
It's slamming.
It's night and day.
Not only does it taste better, it smells like a burger.
Yeah.
Oh, it's a
No
pretty good
doubt.
start.
I mean, you don't even need the cheese.
It looks juicy.
True.
Well, that says a lot about that.
Hey, one last question.
Yeah,
What do you
sure.
think about quantitative tightening as it goes higher and we raise interest rates on September 26th? Just popped in my head.
Well,
Is that the bogeyman?
I'm sorry, is there a question? Do I think it's going
Is
to
that
happen?
the bogeyman? Is that we both think the market probably goes higher? Is that what catches us in the tail?
I think it's going to depend on the data. I think people are expecting it. I think the question becomes not so much are we going to see a September and December hike, but what happens after that? So what's the first half of the year 2019 looking like?
I think they got to slow it down, and I think we're going to sneak up then on 5% earnings growth instead of 20.
Yeah, we'll see. But I mean, it's a great point, because if we're wrong on timing for tariffs, that means it carries over, so it's a greater impact, and we'll be anniversarying the benefit of tax cuts. Different environment.
well,
Yeah.
see, this is why I like Street Smarts, because,
Hey,
we have
Mom.
do we have a viewer question? Wait,
Is that the president?
hello? Yes, we are running out of time. Yes, we'll see you on Twitter later. Thanks for calling. All right, guys, that about wraps up Street Smarts. Thank you so much, Chris. You're always a hoot to have on.
happy
As
to
you
be-
can see, we have a lot of fun with you, and we touched on every topic.
Thanks, Chris.
Happy to do it.
Please come on anytime.
Okay.